Dheeraj, are you explaining anything?
Yeah, we're not able to hear you.
I think you're on mute, Dheeraj.
Oh, sorry, I was actually talking on mute only. I'm sorry. Okay.
Okay.
All right. Now here is a small example that I want to take up. Suppose we have a small format of balance sheet here, and on one side, equity and liability. Then the other side there will be assets. And in this small example, I'm giving a value of the assets as 10,000. There is a formula called, there is something called debt ratio. We had discussed this in one of the questions, but had not given the exact formula for it that time. I just told, not written anywhere. Um, so debt ratio is nothing but debt divided by total assets into 100. So suppose you have total assets of 10,000 and you have debt of suppose 2,000, then your debt ratio will be 2,000 divided by 20,000 into 100. That should be 20%. However, here it's the other way around. Information given, debt ratio is given as 20%. Can you calculate debt from here, liability from here?
Yeah.
So you have assets of 10,000, you have debt ratio of 20%. How do you calculate debt?
20% of 10,000.
Perfect. Yeah, that comes to 2000. Absolutely correct. Now, the other information I'm giving you is debt is 5% interest. So debt is at the rate of 5%. So you have to pay interest of 5%. I'm giving you EBIT of 2,500. Now you have to calculate and tell me what is the net income, please. I've already given you the hint. That was a trick of calculation of debt. Debt value is not given, so I have to calculate the debt value was the trick. So that would be calculated from the debt ratio only.
So in the second one, what is the information that is given
In the second one,
that
as
you
in?
just asked? I mean, what you just
Okay.
asked. So there, what information do you
The
have?
four information that is given to you in this small example are: assets is 10,000, debt ratio is
Okay.
20%, debt is at the rate of 5%, EBIT is 2,500. You have to calculate net income.
Oh, okay. Whatever is written. Okay, got it.
Yes, yes.
Is it 2,400, Dheeraj?
2,400 is the correct answer. Yes.
Yeah.
Aswati, Anvesa, did you calculate? Are you stuck somewhere?
Yeah, trying to do.
Okay, no problem. No problem.
Yeah, I'm also calculating.
Yeah, sure.
$2,400.
That is correct. Yes, 2,400.
Dheeraj, can you explain once more? Because I was doing debt by total assets whole into 100 equal to 20 by 100.
Okay, that way you are doing. That's perfect. Then you replace total assets by 10,000. You keep the debt as debt only. If you do that, give me 1 second. You made one mistake. So when you say debt divided by total assets into 100 is equal to 20 by 100, there is something wrong with it. Can somebody tell what is wrong with it?
Yeah, it should be 20% by 100. Right?
No. It should be 20 only. So the moment you do into 100, no,
Huh.
that is not anymore percentage. That becomes 20,
Oh, okay.
right? If you
Huh.
keep it as debt divided by total assets, that should be 20%. So that should be 20 by 100. If you're multiplying 100 this side, you cannot keep it 20 by 100 there. You have to keep it 20. So just be cautious about that. Now, just delete that divided by 100 in the right hand side and solve the equation by putting 10,000 in place of row total assets.
Okay. So it is 20% of 10,000.
10,000. That is absolutely correct, which comes to 2,000.
Yeah,
Right.
2,000. So net
Sure.
income is EBIT minus 2,000. So
No.
500.
No. This is debt, right? We calculated debt, right? Interest is how much?
Oh, okay. At 5%.
Yeah, don't do that mistake. Yeah. So 5% it will come to 100 rupees, and that's why your net income will be 2,500 minus 100. That comes to 2,400.
Got it. Yeah.
Got it, right? Yeah. Now I'll just relate this to this question, and then I'll move to one more analysis that I have planned. If you look at this question, debt value is given nowhere. However, debt ratio is given in that chart in the first column itself. Capital structure, debt ratio. Can you see that?
Yes.
Yeah.
Yeah.
The total assets value is given in the first line itself. First information is given total assets only. Minimum Limited has total assets of 10 million. 10 million is how many crores? Can somebody tell?
10 million is 1 crore.
1 crore. And how many lakhs?
100.
Yes.
100 lakhs.
Just be very clear about that. Huh? Don't make many mistakes there. So debt ratio is given, total assets is given, EBIT is also given right next to that total asset. If you can see, it's 2 million, which is 20 lakhs. And then we have everything right here to calculate the, net income. However, before moving to the question, let me bring in one more small example. We had already done this in the first time, but I feel like it has to be revised because it's slightly complicated. Now I'll give you some information. You have to calculate EPS, earning per share. Suppose your total net income is 1 lakh. Total number of shares is 10,000. What is the EPS? Net income is 1
10.
lakh. Yes.
1 lakh by
10,000. Yeah.
the 10,000.
Perfect. That comes to 10 rupees. That's clear to everybody, no? Yeah, pretty much simple. Now, same information, one additional information. 1 lakh is your profit before tax. Tax is 30%. Your number of shares is 10,000. What is the EPS?
Seven.
7 is the correct answer. Everybody has raised it. Please let me know if you're stuck.
Yeah, Dheeraj, got it.
Got it.
Perfect. Now, one more additional information. 1 lakh is your EBIT, earning before interest and tax. You have debt of 50,000 at the rate of 5%. Tax is 30%. Your number of shares is 10,000. Let me know what is the EPS.
Dheeraj, can you please repeat it?
Yeah. So your earning before interest and tax is 1 lakh. Debt is 50,000 at the rate of 5%. Tax is 30%. And your number of shares is 10,000. This is the one.
Is it 6.75?
6.75. Let me just quickly calculate it. I have not calculated. No, 6.75 is incorrect.
0.825.
6.825 is correct. Yes. Josie, what is your net income? The final income?
So, so what I did was 1 lakh minus, then 1 lakh minus 30,000 minus 2,500, and I divided that by 10,000.
No, that is incorrect. So what happens is the moment you are paying interest, no, your income liable to tax is also changing.
Yeah.
What I mean is that the 30% is calculated on the net income, right? For the tax purpose is calculated on the net income. So if you are paying interest of 2,500, would you pay tax on 1 lakh or 97,500?
I'll pay it on 97,500.
Yes. So your 30% has to be calculated on 97,500. However,
Okay.
if you're taking 30,000, no, that is actually calculated on 1 lakh. So that's where the difference lies.
Okay.
Yeah.
Yeah.
Everybody must,
6.825. Yeah.
yes, everybody must be able to relate. No, we have discussed this before, but it's been some time, so we have forgotten this logic only. That's all right. Everybody got it right? Any doubts?
No, this.
Great. Aswiti, you got it right?
Yeah, I got it.
Got it. Great. Now, one last, let me make it a little more complicated. You have earning before interest and tax is 1 lakh. You have debentures of 50,000 at the rate of 5%. You have preference shares of 25,000 at the rate of 3%. You have preference shares of 25,000 at the rate of 3%. You have tax of 30%. You have number of shares, number of equity shares is 10,000. What is the amount of EPS? Now, do you remember what was the consequence of preference dividend or preference shares, or shall I just remind you?
Can you please remind the rest?
Yeah, no problem. So preference shares, what happened was preference difference between debt and preference shares was debt interest that you pay to the debt holders is tax deductible. However, the preference dividend that you pay to the preference shareholders is not tax deductible. What does that mean? That means you do not deduct the preference dividend before the calculation of tax. You have to deduct the preference dividend after the calculation of tax.
Yeah.
That makes a huge difference because it does not reduce the tax. As you saw in the third scenario, our tax is lesser in comparison to the second one. That's because we are deducting interest that we are paying to the debt holders. However, we are not going to do that for the fourth scenario. The preference shareholder, the debt will happen same as the third one, similar way, but the preference dividend that we are paying, it will be deducted after the calculation of tax. Now, I've given you that hint. Just try and let me know. In the meantime, let me also calculate.
5.75.
Give me 1 second. Okay. $5.75 is incorrect.
Oh, 6.75. I made a
Yes,
mistake.
yes, 6.75 is the correct answer. Yes. Everybody is using pen and paper now, right?
Yes.
Yeah.
Yeah.
Yeah, has Dheeraja.
Yeah. Everybody got it? 6.75. Any doubts in that?
Yeah, Dheeraja got it. It's the same thing, but 3% of 25,000, you just deduct it, no?
Yes. In the end, after the calculation of tax. So you have to be very mindful what is to be deducted before tax and what is to be deducted after tax, because that matters, because tax amount varies because of it. So that's the trick to this kind of calculations. You just have to remember which one is to be deducted before tax, which one to be deducted after tax. Okay, now that we are clear about it, let's read through the question. Minrim Limited has total assets of 10 million, 1 crore or 100 lakhs, EBIT of 2 million, which is 20 lakhs, and preferred dividends of 200,000, which is 2 lakhs, and is taxed at the rate of 40%. So preferred dividends of 200,000. What does that mean? That is your preference dividend. Preferred dividend means preference dividend. And they have told directly the dividend, not the shares. I give 25,000 value at the rate of 3%. They have given dividend altogether. So you don't have to do any percentage. Now tax rate is 40%, you know that. In an effort to determine the optimal capital structure, the firm has assembled the data of the capital cost of debt, the number of shares of common stock for various levels of indebtedness, and overall required rate of return on the investment. So what they're saying in the last sentence is exactly given in the table below. Let's just look at the table instead of going through that sentence once more. In the table, what they're giving is capital structure, debt ratio they have given 0, 15, 30. So all these are 4 different scenarios, basically. In those four scenarios, they're given the cost of debt also. Debt ratio, we have already discussed what is it, how is it relevant in our question. Cost of debt, you already know. Stock shares, what is this? Equity shares, total number of equity shares. The last one is required rate of return R. What is this? Can somebody tell what is 12%, 13%, 14%? We already know what is it.
Interest.
No, this is for shares.
Preference percentage?
No. Common stock shares. This is not preference shares. You see that, right? Common shares, not preference.
There'll be equity. Is it percent of equity?
Cost of equity.
Yes. Cost of equity is the correct answer. This is cost of equity. 12%, 13%, 14%. You know why is it relevant, right? In our calculation. Now we have to justify the optimum capital structure. That means we have to calculate 2 things. Can somebody remind me? What are those 2 things that we have to calculate?
WACC
And
value of the firm.
perfect. Perfect. Now everything is given now except one thing, that is value of debt. Everything is given in this question except value of debt, and I have already told you how to calculate that value of debt. Yeah, from this kind of ratio thingy, debt ratio thing. Now that you know, take up the first scenario, that is 0%, 0%, 200,000, 12%, and let me know what is the what do you call it, value of the firm and WACC. 2 things you have to calculate. So now just focus on the first scenario, forget about everything else. Your debt ratio is 0, cost of debt is 0, stocks, that is equity shares, is 200,000, required return, that is cost of equity, is 12%. Now these informations are common. So your total assets is 10 million, EBIT is 2 million, dividend, preferred dividend is 200,000, your tax rate is 40%. Tax rate is 40%. You have to calculate WACC and value of the firm.
Dheeraj, can you show the question one more time?
Yes, yes.
Dheeraj, so for this, interest will be 0 because cost of debt is 0, right?
That is correct. Yes.
Okay, and then it's the same steps which we did previously.
Yes, yes, yes. Absolutely, yes. Exactly same steps. As you can see, it's no way different than the others. It's just that a slight trick to it was there just for the calculation of debt. Everything else is same. And one additional thing is, in the other questions, we did not have the tax rate. We did not have the preference dividend. Here, both of them are there.
Yeah. Okay. There is.
Yeah, yeah.
Dheeraj, here EBIT is given and stock shares are given, right? Is stock shares the cost of equity? I mean, value of equity? Dheeraj, I think you're on mute.
Oh, sorry. I was actually talking on mute. So stock shares is the number of equity shares. Now, now that you don't have the shares total, the value of equity, how will you go forward? You have the net income.
Yeah. EBI, a net income we can find out by deducting the debt value from EBIT.
Yeah, correct.
So, yeah. And stock shares, what is the relevance?
Stock shares is to calculate the EPS. I'll tell you a little bit later. Now that here you don't have debt, right? If you don't have debt and you have equity, cost of equity 12%, your WACC is also 12%, isn't it?
Yeah, correct. Yes.
If you don't have debt, you only have equity, that means your WACC is also 12%. Now, if you have net income, if you have WACC, can't you calculate the value of the firm?
Yeah, value of firm can be calculated,
Perfect.
but stock shares doesn't hold value unless we calculate EPS for this question, correct?
Yes, that is correct. That is absolutely correct. I'll tell you the relevance of calculation of the EPS little later, once you have done that WACC calculation and the value of the firm calculation.
Okay, okay,
Yeah.
okay, got it.
Now let me just
Dheeraj, I got the net income as 10 lakh.
net income of 10 lakhs. Give me 1 second. I just want to share this question in a different. Yeah, okay, I've done that. Net income of 1 lakh you got. Sorry, how
10
much you
lakh,
got?
10.
10 lakhs. 10 lakhs is correct answer. Yes,
Yeah.
10 lakhs is the correct answer.
And now what do you do next?
Now, have you calculated the value of the firm yet? No, right?
No.
How to calculate? Can you tell me how to go forward?
I don't know, Dheeraj.
So value of the firm, if you remember net income, if you have net income, if you have overall cost of capital, how to calculate value of the firm? We have done this before. If
Okay, you divide it by your equity.
Yes. Equity?
Okay, that will give me value of the firm.
Yes.
The required rate of return. Sorry.
Yeah. So that is the WACC only. So you just divide that by that. Sorry, I'm making a mistake here. I'm sorry. So if you have net income and you have cost of equity, if you have net income and you have cost of equity, how do you calculate value of the firm? That's what I asked. If you remember, what do you call, when you had EBIT and overall cost of capital, you divide both and you would be able to calculate the value of the firm, right?
Yeah.
If you have EBIT and overall cost of capital, does that make sense?
Yeah, correct. We did that yesterday. Yeah.
Yeah. And however, value of the equity can be calculated. How? If you have net income and you have cost of equity, you can calculate the value of equity, isn't it?
Yeah, value. Yeah, we just have to divide it, no?
Yes, exactly. Just calculate the value of equity from there. And that exactly should be equal to your value of the firm also, because you don't have any debt currently.
Okay.
Yeah.
So it'll be 10 lakh by 12%.
That is correct. Yes.
The value of the firm comes to 183.33 lakhs.
183 you said? No.
Hmm.
You did 10 lakhs divided by 12%, no?
Yeah, that is 83.33.
Yeah, that is the value of the firm only.
Oh, right. I added it again.
Yes.
Dheeraj, for all these, we have to calculate separately, right? For the first
Yes.
row, we have to
Yes.
calculate WACC as well as value of firm.
Yes.
So what Joshi was telling is net income was 10 lakh. How did he get it? Because we have to do total assets into 15%, and we have to do 8% of that.
Wait, 15%?
Yeah, for second one, debt ratio
Okay,
is 15%.
second one. Okay, second one you're talking
Ah.
about. Perfect. Yeah, go ahead. Yeah, 15%, you are right.
So 15% of 1 crore,
Yes, that comes to?
and then that comes to 15, one second.
Lakhs.
Yeah, 15 lakhs.
Perfect.
And 8% of 15 lakhs, we have to calculate and deduct from EBIT. That's
Perfect.
how we
Yes,
calculate net income.
that's exactly
That
how
comes
it
to 10 lakh?
No, that was for first one. You are taking the second one, no?
Yeah.
The 10 lakhs was for the first one.
Okay.
Yeah.
Okay. Because we don't have debt ratio, I mean debt, value of debt, I thought that it will be 0. I didn't calculate net income.
Oh, is it? No. We'll be either we calculate, so that has relevance. That'll be 10 lakhs only.
Okay.
So net income, when you say that 10 lakhs is not exactly net income, that is called profit available for equity shareholders. So that's what is the name for it, the 10 lakhs. But yeah, that is for the first channel. But before we move to the second scenario, I want to discuss a little more about this. Once you guys are done with it, if you have reached to the value of the firm 83 lakhs 33,333, just let me know.
Yeah, reach that.
Oh, great. Anvesa, you have reached?
Yes.
Okay. Switi, you also?
Yeah, Dheeraj, yeah.
Okay, great. Now let me ask you, if you have value of the firm 83 lakhs 33,333, I'll ask you, what is the market price of this share? If this share would be dealt with in the stock market, what would be its price? Can somebody guess and tell me, how do we calculate that?
This divided by the number of shares in the market.
Absolutely.
No, the total number of shares.
That comes to?
It's divided by, then we have to do 2 lakhs. So before 41.665.
Absolutely correct. So 41.67. Everybody got it? How did you calculate the market price of the share?
Yeah, Dheeraj.
Yes. So
I didn't get it.
Okay, no problem. So you have the value of the firm as 83 lakh 33,333, right?
Yes.
So that is nothing but your value of equity, isn't it? Because you don't have any debt here.
Yeah, right.
So your value of equity is 83,33,333. You have 200,000, that is 2 lakh shares. What is your market price per share? What is the value per share? How do you calculate?
Divided by
Yes.
the number of shares.
Yes. When you do that, you get 41.67.
Okay, so these
Yeah.
stock shares are the number of shares, equity shares.
Stock shares are number of equity shares. You're right.
Okay.
Now,
Yeah, got it.
now there is one more way of calculating this price per share, the market price per share. Now, before we go there, let me stress on why are we calculating the price per share? Here, if you look at the question, it says choose the optimal capital structure. Okay. Now, earlier until now, for every question, we were calculating the WACC and value of the firm. Yeah. Now, we can also calculate this is also another indicator of the capital structure strength of a company, that what is the value of the share of the company in the market. Just look at the market today. If you look at the Apple company's market price right now, you cannot even touch it. You, even just to purchase one share, you have to pay a good amount of money. That in itself says, the market capitalization that he has, the demand or the kind of strength that he has over its stakeholders. Now, so a company's structure can be judged from the market price of shares in the stock exchange also. So along with our value of the company, WACC, like we have been calculating, we can also compare what is the market price of share in these 4 scenarios. If one scenario is having the highest, that is the better one. Makes sense, right?
Yes.
Yeah. Now there is one more way. There is one more way of calculating this market price per share. I'll ask you to calculate what is the earning per share in this scenario that you just calculated in the first one. Can somebody tell, please? Having any doubts? Are you stuck somewhere? It should be very easy. Profit available for equity shareholders is how much?
No, that is 10 lakh.
10 lakhs. And number of equity shares is how much?
The stock
2
share,
lakhs.
that is the 2 lakh. Yeah.
Perfect. So what is the earning per share?
5.
Yes. That
Oh,
is.
we just have to divide this.
Yeah, exactly. That is earning per share, no? You
Okay,
already
then
have done
fine.
the calculation. Yes. So now that you have EPS, just do something that I'm telling. Okay, do earning per share divided by cost of equity. Do earning per share divided by cost of equity. How much are you getting?
41.6.
Yes.
That is the market price.
Exactly what we got in the other way also. So you can do in both the ways. Any way is fine. What I said was earning per share divided by cost of equity. If you look at it, no, we are doing nothing different. Can somebody quickly tell me if you are able to connect? These two methods are no different. In one way, let me just quickly share this Excel and I'll explain. I think we have 1 minute left in this call. We can join back. Now, in one way, what we did was net income divided by number of equity shares, right?
Yes.
Now, in other way, we are doing EPS divided by cost of equity. Sorry, I said wrong. So this is not net income. This is value of equity. So value of equity divided by number of equity shares, that gave us the market price. EPS divided by cost of equity also gave us the market price, right? Yes, everybody
Yes.
agrees? And the value of equity was 83 lakh, 33, we divided it by 2 lakh, that came to 41.5.